All right, good evening. It is January 14th, 2022. So, wore an appropriate t shirt today. I don't know if you can read it, but it says, "A year from now, you may wish you had started today." So, last few videos ago, I had talked about building business credit. And one of the ways to do that is to get net 30 accounts. So, simple kind of business accounts that are kind of lower risk. A lot of times, though, they have products that aren't really necessarily what you need. I'm only signing up for this company for the sake of building the credits. So I need to spend a minimum of $50 with each of these four companies for 3 months in a row, pay it off each month, and that will help build my score to a score of 80. A paydeck score of 80 is the goal. Through one of them, I think it was shirtsy.com, bought a few shirts like this. Last Monday, you would have seen me wearing one that said, mindset is everything. And so I picked these shirts just because they kind of fit with, I don't know, it just resonated with me for whatever reason. So this one, I felt like it's appropriate because it's 2022 now. And it's kind of motivating me to get going, get moving. So yeah, it's a new year. Let's hit the reset button and go forward. So that's kind of what this shirt is about. Last week, mindset is everything. It's absolutely true. Wondered why am I starting this at 38? Why didn't I start syndicating at 20? Something like that. So there are some younger people in our group, in our investment group, that are in their 20s, and that to me is just utterly amazing. Anyway, the thing that held me back for the longest time was just mindset. I had sort of a scarcity mindset that I just wanted to get by each month. Was all I needed. Money was meant to be spent, that kind of thing. So I spoke about that last week. Just to get to the update part about what HKV has been up to. So talk about partnerships. So we've now got a couple more partners. Figured out how to add them in through our operating agreement. Working with our attorney to do that. So we have added an underwriter, so a chief underwriter and a chief technology officer. And so by adding that chief technology officer, he'll be able to help me with things like this. So getting a little better with these videos, getting a little better with my computer. So, I had tried doing that on my own. I got this 3-monitor display and I had ordered a custom computer, and it got destroyed by the shipping company on the way out. So I'm gonna have to get a new one, or hopefully that one can get repaired. So right now insurance is processing that one. It's at a repair shop. Trying to source parts in the midst of a chip shortage is a bit difficult, or in the midst of an everything shortage lately. So partnerships, that's great. We have also some other people with their own LLCs, their own businesses that we're partnering with outside of HKV to partner us on deals, to partner with for investor relations as a sponsor. So we teamed up or have sort of been mentored now by a sponsor who has about 350 doors to his name, $50 million net worth, and so that's a great relationship. So part of this video is that, connect with the sponsor, let the sponsor know, hey, what am I doing each week, right? So a sponsor, what they do is someone who has more experience than you, who's going to help sign on the dotted line and guide you. And of course, they're going to take a percentage of ownership in what you're doing in real estate. So that's kind of where I'm at with a sponsor. I don't want to go into buying large apartment complexes. So that's what syndicating for me is. Multifamily syndicating is trying to go into buying large apartment complexes with a team of investors. So going into that, now moving up from starting in the single family home space and moving to the small multifamily space, and now moving up to slightly larger apartment complexes. So as I grow up larger, now I'm at a point where I can't do it as well by myself. There are people that try to manage 80, 90, 100 unit apartment complexes by themselves, maybe with a couple friends or a family member or something like that. But that's a sole proprietorship. That's a full-time job. Kind of defeats the purpose of investing in my mind and limits me just to that one apartment complex. Whereas by syndicating, we can do more deals, do more things, more projects around the country. What am I trying to say? fill more need. There's a huge need, housing, kind of a housing crisis, a housing shortage following from the 2008 crash. Everyone kind of got scared to build things because they don't want to force another crash. So, but now we're kind of due for a correction. So what some would call a crash again, and going into multifamily space instead of the single family home space, especially at that kind of moment, makes sense to me because as the economy gets tougher and tougher to operate in, as inflation keeps going up and up, it's going to cause a lot of strain on people. As a lot of those government subsidies and things that have been coming out go away, like that's going to increase strain on people who have sort of over leveraged themselves and gotten into houses that they can't afford or things like that. So we should expect like maybe some more foreclosures or things like that. Expect that when those people who moved into A-class properties that they could only afford with, maybe the subsidies or things like that they were doing in a very strong economy. Once that economy starts to dip down, a lot of times those people will move out of A-class properties and down to B-class properties. Hence why I'm trying to purchase C-class properties in B-class neighborhoods and bring them up to B-class level, right? So that way we can kind of meet this need as it comes out, as it comes open. And I like B-class properties because that you're dealing in nicer neighborhoods slightly, but not the top of the line where you can't, where you're at that risk, of if the economy gets too strong, then now people are going to be moving out and not able to sustain your business well that way with a whole bunch of vacancies. So partnership sponsor Turo. So Turo, I have 2 cars listed on Turo currently. So I have the Tesla Model S and I have the Chevy Cruze in Vegas. However, for the last couple months, we haven't gotten much bookings like at all. And I've tried reducing our rates ridiculously low so that we're basically just not even really basically just barely making our insurance payment. Luckily the Cruze I bought cash. So for this reason, because it was an experiment, I bought the Cruze also because it's a lower end, kind of economic, not really low end, but it's an economical car, a little cheaper. So less risk for me, right? Because the Turo side was sort of an experiment to see like, is this something I would want to do? Would I want to build up to 25, 30, 50 cars listed on Turo? And at that point, getting set up as an actual like rental car agency or dealership. Dealership would be the ultimate goal because as a dealer, you could source cars on the wholesale markets. And that gives you the ability to list them, rent them out, and still feel pretty safe in being able to sell them and still at least recover your funds. Whereas having to go to a regular car dealership, pay full retail, like just so, as if you're just buying it for yourself, that's not going to leave much margin to be able to make much profit on Turo as a rental vehicle. With Turo, there's that with the less bookings, lower rates just to get any bookings at all. Omicron, COVID, so I'm sure is having a big part of that. It's also just a slow down time in the season anyway. January, February aren't the most popular times for people to visit Vegas. And then with people with conferences canceling, Omicron, so it just kind of adds to the problem. So with Turo, the plan is to sell off both of those cars. And I know the Tesla is intended to be used for the bunker project, but it doesn't belong to the bunker project. It's just my personal vehicle that I was sort of loaning to the guys in the house. So we got 5 guys there now, but all of them have their own vehicles. So none of them need the Tesla at all. It's just sort of sitting under the carport in the way. It'd be nice to have 2 veterans be able to park undercover instead of only 1 right now as it is with the Tesla in the way. So if it's not being utilized and it's not being rented out and creating any sort of funding for the nonprofit, then it just makes sense to get rid of it, at least for now. We can always get another electric vehicle later down the road. The house is already set up with the solar, the charging station. So that's not a problem. So I'll plan on going back and getting another Tesla or some other electric vehicle. Maybe we'll try something different. Maybe we can get that Rivian truck or something. That would be awesome. But anyway, we'll try to do that. We'll try to get another vehicle down the road as things catch up. So by June, we predict, there's some predictions in the market that the used car market specifically will take a big dip. So the new cars manufacturers are getting caught up with, as COVID had kind of, goes down, they're able to bring back their employees, get caught up on production. Once that production gets caught up and they release those cars back into the economy, the used car market's not going to be nearly as desirable. There's going to be sort of a flood of cars, so those prices are going to take a big drop. So it makes sense to me to sell now while things are still high. So the Tesla, if I sell it now, I bought it for $38,000, and I expect to list it for about $48,000. So we'll make a good chunk of change on that car. It's very low mileage. It's totally worth it, worth the dollars right now. It's about 23,000 miles on a 2015 Model S 70D autopilot. So if you'd be interested, that car is for sale. And then the Cruise, I'm going to list the Cruise for $12,000. And that one, I'm just trying to recover the money that I already spent to get into it. It hasn't gone out once as a rental, so it's made zero money. We rented it from ourselves just as a test to see if that would help, because since you have no bookings, it's harder to get listed on Turo's listing page. So, so even after listing it or purchasing it, renting it from ourselves, still nothing. So it makes sense to get rid of those two cars, and that will free up. So the Cruise is paid off entirely. The Tesla, I think I owe about $19,000 on that. So that will free us up about, I don't know, just about $35,000 or so that we can then use toward continuing growing with the syndication stuff, putting into reserves, just kind of honing in on one business. So really, like, to do syndicating and Turo together would just be way too much for me anyway, starting out. At least starting out in business, it's what I'm figuring out is that it's better to start saying no at a certain point, right? Like, I've said yes to a lot of things because I didn't really know what would pan out or what would be, a good option versus not. So I want to just say yes to everything and try them all at first, and then start to bring off the things that don't really pan out. So syndicating was the most promising from the start. Multifamily apartment investing is the most promising, but it's an extremely difficult business to get into. There's a whole lot of knowledge that needs to be gained just to learn how the industry works, how to structure a syndication model. A whole lot of team members that have to be put together. So you need, a capital raiser who's also you're going to do some investor relations. You're going to need marketers. You're going to need, just all these different team members. Acquisition specialists. You're going to need an asset manager to manage the asset. The apartments once it's been closed on. Then you're going to need all the people to do the managing. So you've got the property manager, you got your contractor who's going to help with all of your rehab. Then you're having to get connected with government officials a lot of times. So like the apartment complexes sometimes can be like small towns. I remember when I lived in Oregon. I lived in a town for a while that had, I think the signage when you pull into the town said, "Welcome, population 812." Was when I lived there. So there are apartment complexes that have a lot more units than 812. So yeah, you're kind of setting up like a small town in some instances. So anyway, get back to this. So Fourplex. So the Fourplex is underway. I showed some video of that early in the week. I'll be going back up probably next week and just sort of helping out with the final pieces. So if there's anything left, take care of that. And we're doing it ourselves, myself and my buddy, just to save on those labor costs. So we've gotten down to the wire with sort of losing out with the moratorium, so not being able to collect rent for a few months to do the moratorium. And then once that came up, then the person just bailed out because they owed a lot of back rent, and ended up just letting a squatter move in, who maybe a team of squatters, I don't know, a few people, it seems like, but they completely destroyed the unit. So I shared a video about that. And so now that's kind of cleaning up all that damage. Stuff that was a little bit more than what I had bargained for when I bought the Fourplex. So for me, as a new entrepreneur sort of starting up, I don't have massive amounts of capital that's needed in order to do that by myself. Hence, again, syndicating, working with teams of investors, that working with a team, people who have money to want to be in real estate, but they also maybe have a full-time job, or maybe they're retired. They don't have the time to be traveling around to different things and coordinating all these people and setting up businesses. They've already focused on something else right now. So that's where kind of we can team up. So we've got active side, passive side. Active side is going to do the work. Passive side is going to put in the money to do all the rehab, close it, all that. And then together we accomplish this mission of managing and rehabbing, managing, building, whatever, a large apartment complex, and reaping the rewards from that through cash on cash and equity upon sale. There's also cost segregation, so using the depreciation from the building itself to kind of offset some of the capital gains taxes, things like that. So lots of different ways to benefit in real estate. So that's it with the Fourplex. So now we've got this capital raise 506B. So what does that mean? So a deal, or one of our partners, so we have a team member, capital raiser / investor relations asset manager, who brought a deal, and I presented it to an investor, and that investor put in a large sum of money, or is putting in the process of putting in a large sum of money. But it's a 506B, Regulation B. So what that means is that I can't really talk about the deal. I can't really talk about where it is, the size, give you any kind of inclination of what the deal is all about. So 506Bs are for sophisticated investors. They allow sophisticated investors to put in money on this apartment investment. And what a sophisticated investor is somebody who has invested some money in some way. So that's kind of an open term. Could be crypto, could be stocks, could be your 401k even. So anyway, somebody who's done some sort of investing, sophisticated, but they don't necessarily meet the accredited investor level. So the accredited investor level, that's somebody who has $1 million net worth without including their personal residence, or they make $200,000 a year for at least the last 2 years consecutively, and expect to make the same next year. So anyway, so the reason there's these two delineations, so 506C, so if I were presenting a deal that's called a 506C, that is a syndication model that's allowed to be sort of publicly, allowed to be put out there in the public. So with that, man, I am really burning out. But anyway, the 506C. So the 506C, it's where you are allowed to reach out to those accredited investors, and you can just put out your offering memorandum and say, here's our apartment complex, and here's what we expect for our returns, and all of the details that would go in an offering memorandum can be put out to the public. So anytime, if I come across a 506C, and I've got at least one or two, that I need to look at and share. And so I'll talk about those later. The 506Cs I can talk about on video here, because those are for accredited investors only. So you have to meet that accredited investor criteria in order to invest in those apartments. And the reasoning, the philosophy behind that is that accredited investors have the ability to lose money if they need to, whereas sophisticated investor, they have some knowledge about investing, but it's a little bit higher risk because they're not, they haven't made it to the level of having a significant sum that they can use as a cushion in case things go awry, which hopefully they don't, do due diligence and planning and all of that. So underwriting. So that's what a 506B is. So that's one where you can bring on these sophisticated investment partners, but the catch is that these cannot be shared publicly. You cannot discuss these publicly. It's only for people who you have a personal relationship with already. So that's because they want the sophisticated investors to invest in people who they trust. Essentially, they don't want someone sort of taking advantage of these sophisticated investors who might not be as knowledgeable as an accredited investor or have as much cushion to be able to fall back on in case things don't work out. So this deal is a 506B. So I'm pretty happy to be part of that as participating by raising a little bit of capital, and then that earns me portion as a general partner on the deal as well. And it's very small, but it gives me some experience. It gives me some experience in the door. I get to see this deal from the start all the way through the end by being sort of this general partner in that way, especially in the beginning with raising the capital and seeing how they work with the investor to explain the process. So first we got an offering memorandum to give a basic overview, present them a private placement memorandum after that, and that gives a really detailed analysis of the project. And so being able to go through these processes, that's the value in bringing this capital to this deal. And then on the opposite side, bringing this deal to that investor is going to bring them some amazing returns. This is an opportunity zone project. I'll talk about, I can say that. And it's gonna, and so with that, with investing in an opportunity zone, in case you don't know what an opportunity zone is, these are areas that are designated by cities as sort of projects where they want to focus, where they want investors to come in and focus. They have a plan for this area. They want this area revamped, right? So most cities will have sort of different areas that they've designated as opportunity zones. And the way they create an incentive to investors to put their money into these areas or build projects in those areas is by deferring or waiving entirely the capital gains tax. And so by waiving capital gains tax, you're basically just giving them a 40% return on their money, right? If you expect to pay 40%, 30%, whatever it is, based on your tax bracket and stuff. So anyway, that's that. So brings us to the bunker project. So the truck, the Denali, I'd like to get that wrapped. Everything's going great at the house. I just talked to the house manager a little bit ago. I asked him, do you need anything? Any complaints? Nothing. All is good. When I went there, we installed the reverse osmosis water system to get rid of the jugs, just to save a little bit more money. Everywhere we can possibly save money at that house, we try to do that while also providing, the best possible service that we can. So that's that with the house. So anyway, so the Denali, the truck I bought. So I bought that truck on business credit, and so that's really meant to be a business vehicle. So it makes sense to me to wrap it. Let's get the bunker project name out there. So that's what I am interested in doing. So we'll get to that point, going over a Denali wrap. So if you're out there and you know anything about wraps, want to donate a wrap, want to help us design a wrap, that would be awesome. So then also my Uncle Steve. So Uncle Steve passed away in December, and that was a sad time, of course. But when he went, he left behind a little bit of cash, and he left behind some items, some musical items, mostly a whole bunch of guitars and things. And so we're going to hold like a charity auction for his old musical equipment. It's not old, it's actually very nice, very high quality stuff. He was a musician both in a band and in his church, ran the soundboard and stuff for his church and played bass. Just all around musician. So anyway, so for Uncle Steve, he was an Army veteran, and we donated basically everything that he left behind to the bunker project. So it seems appropriate that I would like to name the house after him, the bunker project house. We like to call it the Steve Rogers Memorial Bunker Project House. So with that, I'd like to order a wooden, one of those kind of like wood burned, real nice signs in his honor, and put that inside the house. I try not to put any signage outside the house, just to not draw attention to the house. Don't really want to advertise, hey, there's a bunch of veterans here in this house. Just seems like not a great idea. And I don't think the neighbors really want signage as if this is a commercial building in the middle of their neighborhood. So we'll put the sign inside the house, was kind of my plan, in a prominent area, and and just kind of dedicate that house to him, and just sort of keep his memory alive in that way, keep an Army veteran's memory alive. So that's pretty much it for this week. Tomorrow I'm volunteering at Habitat Restore, so might film a little bit from there, show what that place has to offer, because it's pretty great. Lots of great deals for doors, windows, sometimes appliances, all kinds of different construction tools and connectors, all the different things that you might need to work on a house or even an apartment. So and it's all at discounted rates because it's basically a thrift store for construction items. So pretty excited to go work there. Very appropriate to my industry, real estate. So that's about all I got. These things still pretty long, 25 minutes, 26 almost now. So anyway, I will work on closing my mouth a little bit or structuring what I'm saying a little better. But I have an outline, I have a plan, and then I just end up going on rants. I'm guilty of being in grad school forever, and that's it's kind of one of the things that happens there, right? I don't know if you've ever taken a college class, but they always go on rants. So here I go on my rant. So anyway, have a good night. I will talk to you Monday.